All right, let's get right into it. The AI gold rush is here, and pretty much everyone is wondering the same thing. Where's the real money to be made? We're not talking about just doubling your investment. We're talking about that life-changing 10x return. And today, we're going to break down how a small investor, someone just like you, might be able to find it. So, let's make this real. You've got $1,000, a G. The goal? To turn that into $10,000 by playing the AI boom. Now, your first thought is probably Nvidia, right? Or some other big chip stock. And look, that's the obvious play. But is it really the smartest play? Is that where the asymmetric upside really is? Yeah, we're going to argue that it's probably not. See, we think the real opportunity, the one that could actually give you that 10x return, isn't the flashy stuff everyone's talking about. It's kind of boring. It's the stuff happening behind the scenes, solving the single biggest problem that this entire AI revolution is running headfirst into. And that one huge problem, it all comes down to power. We're talking about pure, raw electricity. The whole AI dream, it's completely dependent on a resource we've basically ignored for the last 20 years. And that dependency is creating what might be one of the biggest bottlenecks and investment opportunities of our lifetime. Just to put this into perspective for you, get this. A single query on ChatGPT, just asking it one question, takes about 10 times more power than a regular Google search. 10 times. Now, scale that up. Think about the billions, maybe trillions of AI queries that are coming. It's an absolute tidal wave of new energy demand that our grid is just not ready for. There's a great quote from Pranay Kirpalani over at Fidelity that just nails it. He said, "Power is the feedstock for AI." And that's the perfect way to think about it. It's not just something you plug into the wall. It's the literal raw material, like iron ore for steel. No power, no AI. It's that simple. So here's the big takeaway, right? Everyone's obsessed with computing power, the chips, the GPUs. But that's not the real bottleneck anymore. The true limiting factor, the ceiling on how fast AI can grow, is literally the number of outlets we have. It's the availability of electricity. You can have the world's most powerful data center, but if you can't plug it in, it's just an expensive paperweight. And this is shaking up an entire industry that's been, pretty sleepy for a long time. For like 2 decades, electricity demand in the US was basically flat. But now, utilities are suddenly staring down the barrel of what they call a massive CapEx cycle. And what does that mean? It means they have to spend a ton of money. We're talking estimates of $1 trillion in new infrastructure investment. That's not money they want to spend, it's money they have to spend just to keep up. Okay, so if there's $1 trillion spending spree coming, how do you, with your $1,000, get a piece of that? Well, this leads us to one of the most classic investment strategies of all time, the picks and shovels play. Think about it. During the gold rush, who got rich for sure? The guy selling the tools. And the idea is super simple. Instead of gambling on which AI company is going to be the next Google, which is super hard to predict, you invest in the boring, essential stuff that every single one of them needs to operate. And in this AI gold rush, the picks and shovels are the companies that build the power plants, the cooling systems, and the grid itself. And it's a whole ecosystem, right? You've got different ways to play this. You have the big power generation companies like GE Vernova actually making the turbines. Then you have the guts of the data center, the electrical systems from companies like Eaton. And this is a huge one. You have the specialized cooling guys like Trane and Vertiv, because these AI chips get incredibly hot. And finally, you have the guys who literally put it all together, the grid contractors like Quanta Services, who are out there building the physical power line. And look, if you want proof that this is real and happening right now, just look at a company like Vertiv. They do that critical data center cooling we were just talking about. Their order backlog, that's the line of customers waiting for their stuff, just hit a record $9.5 billion. That's not hype. That's cold, hard cash waiting to be spent. It shows you how desperate these companies are to get their hands on this gear. Okay, so the picks and shovels idea is pretty grounded. It's about concrete, steel, and physical infrastructure. But let's get a little more out there. Let's think about a wild card. What about the financial infrastructure for this new AI world? This is where an idea called asset tokenization comes in. It's definitely next-level stuff, but it could be a whole other way to play this. So what the heck is asset tokenization? The easiest way to think about it is like this. You know how the deed to your house is a legal piece of paper that says you own it? Well, tokenization is just creating a digital version of that deed on a blockchain. But you can do it for anything. a share of Apple stock, a painting, or, and this is where it gets interesting, a fraction of a data center's computing power. And this is where that potential 10x or even 100x idea comes from. Look at this chart. Right now, tokenized assets are, well, they're nothing. 0.01% of global markets. It's so small it's hard to even see. That means you are looking at the absolute ground floor. If this idea catches on and just captures a tiny sliver of the traditional financial world, the growth would be astronomical. It's a true asymmetric bet. But what does this have to do with AI? Well, everything. Think about a future with what people are calling an agent economy, where AIs are doing business with other AIs, buying data, selling computing power. They're going to need a way to own things and pay each other, right? Tokenization is basically the financial plumbing for that world. It gives an AI a secure digital identity, a way to prove it owns a piece of data, and a way to send payments to another machine instantly with no middlemen. It's building the financial rails for our AI future. Okay, let's pull back for a second. I know this all sounds incredibly exciting, but we have to have a reality check here. Is this a real opportunity, or are we just describing the next dot-com bubble? It's time to weigh the hype against the reality. And there are definitely two strong sides to this argument. The bears, the skeptics, are looking around and saying, hey, this looks a lot like 1999. You've got froth everywhere, startups with insane valuations. It feels like the hype might be getting ahead of the fundamentals. But the bulls have a pretty good counterargument. They'll tell you this time is different. Why? Well, for one, this whole build-out is being funded by cash from some of the most profitable companies in history, not mountains of debt. And valuations, while high, are nowhere near the completely unhinged levels of the dot-com peak. And I think this quote from another Fidelity analyst, Brad Benjamin, really captures the biggest risk here. He says, the market can get ahead of itself and assume things will happen faster than they actually will. And that's the key, isn't it? The core idea might be totally right, but if you get the timing wrong because you got swept up in the excitement, it can be really, really painful. All right, so let's land the plane. We've talked about power grids, tokenization, bubbles. Let's bring it all back to you and your $1,000. What's the big takeaway here? I think you can boil it down to a simple three-step way of thinking. First, you've got to look deeper. Go past the headline stocks that everyone's yelling about. Second, focus on the bottleneck. Find the biggest problem holding back the revolution, because solving that problem is where the real value is. And right now, that problem is energy. And third, you have to be honest with yourself about risk. Do you want the steady, tangible picks and shovels play, or are you willing to take a shot on the more futuristic, high-reward idea of tokenization? And really, this isn't about giving you a single stock to buy. That's not the point. The point is to understand the scale of what's happening. This isn't just another tech trend. It's a massive, fundamental shift in our economy. This trillion-dollar rebuild of our industrial and energy backbone, it's a story that's going to play out over the next decade, not the next quarter. So we'll leave you with this one question to think about. The AI gold rush is on. There's no doubt about that. The only question for you as an investor is, are you going to bet on one of the thousands of miners hoping they strike gold? Or are you going to be the smart one, selling the picks and shovels to